You're listening to POD99, a podcast by Wealth99 that helps the 99% take control of their financial future. We talk to experts from across the alternative asset space who share their insights on new wealth, how to build it, and how to keep it. Let's get on with the show. Hey folks, welcome to POD99, a Wealth99 podcast, slightly different podcast for you today. I'm really going to run through some interesting data points and narratives as we start to approach the next Bitcoin halving, which, as we record today, is approximately, give or take, around 200 days away. So I thought it would be interesting just to start, tracking that countdown, because, as I say, it will get a lot of attention as we begin to get closer in the months and months ahead. Now, I should mention I'm recording this as a video using Zoom, so I'm going to publish this on the Wealth99 YouTube channel. I do recommend you watch along so you can see the different charts and visual references that I'm going to use. But of course, if you are simply listening on Spotify, Apple Podcasts, any of those audio platforms, that's okay too. You can do that. So no dramas either way. All right, folks, let's get into it. So we're going to start here on the Brave New Coin website, because they've got this little handy countdown here. You can see a countdown to the fourth Bitcoin halving. According to this, 201 days to go. Now, this is very much an approximation. Will vary depending on the time that each block takes to process and the lead up to the halving. So you can find different countdowns around different websites, of course. And I did check a few of them today, and some of them say, 200 days. Some of them say more like 230 days. So it's very much a rough approximation. But it does give you a rough idea. So the halving really will take place probably sometime in March, maybe April next year, I think is a good way to think about it. Now, what's interesting about the Brave New Coin website here, they also have all this different price data based on the previous three halvings. I'm not going to go through all that today. You're more than welcome to have a look at that website if you want to dig into that yourself. They also have this nice chart here, which kind of demonstrates things in a nice way. Just before we look at the chart, what is the Bitcoin halving? Should explain that as well. I'm guessing most people do know, but really simply, the Bitcoin halving happens roughly every 4 years. Of course, the Bitcoin network is secured by miners, and miners are rewarded for their work in newly created Bitcoins. This, of course, is called the block reward, and this is how new Bitcoins are released into the system. So a new block of transactions is added roughly every 10 minutes, and the miner that verifies that block gets the block reward. The current block reward is 6.25 Bitcoins per block. So the next halving will reduce that from 6.25 to 3.125. It happens every 4 years. So that, in a very simplistic way, is the Bitcoin halving. Now, this chart shows the three Bitcoin halvings that have happened so far: here, here, and here. And the next one will happen around there. And just really in a kind of rough, ready, basic, fun way, it shows what has happened in the past. After each halving, you get this bull cycle from here, which is in the green. And afterwards, we get the dreaded bear market in the pink. And then it kind of just goes sideways, accumulating, expanding as we approach the next halving, which is exactly where we are today in the yellow. We're kind of expanding, accumulating, just going sideways, a little bit up and down as we approach the next Bitcoin halving. So, there's no guarantee that what has happened in the past will happen again, but if it does, if we can expect the 4-year cycle roughly to play out again, you might see a bull run will begin around the halving or in the lead up to the halving, and yeah, that is what we hope we have to look forward to. Of course, we don't know, but that is why it is so fascinating, and that is why you'll start to see so much media attention, I think, around the Bitcoin halving as we get closer to it. Now, I thought this was interesting. I just had a look at Google Trends. I just put in Bitcoin halving. Let's go worldwide. Bitcoin halving worldwide over the last 5 years. So you can see, not really any much interest at all, apart from here, 2020, May 2020, which of course is when this is May 2020, which is when the last Bitcoin halving was. So you can see there was a stupendous amount of interest around then, but afterwards, none, and really still none now. But what that suggests to me is that, yeah, we're just a little bit early at the moment, but there will be this incredible surge of interest again as we get closer. And I thought this would be interesting as well. So if I just put in Bitcoin and compare that to Bitcoin halving across the last 5 years, you can see Bitcoin goes up and down, very volatile, roughly tracks the price performance of the market. And that surge of interest in the Bitcoin halving back in May 2020 is really just a blip compared to overall search volume for Bitcoin. But again, that just suggests to me that with the renewed or the much larger volume of interest in Bitcoin since then, potentially we could get a greater media narrative around the Bitcoin halving this time around. So I hope that makes sense. I just think it's kind of interesting to set the scene of what these narratives could look like. Just want to show you, just in case people are looking at the price of Bitcoin today, which is around about 26,000 US today for Bitcoin, and that is down from around 30,000 a week ago. So you may have seen people talking about the Bitcoin crash. So I just put this here to put that in perspective. Yeah, it's down 10% since last week, but that's what it looks like on the kind of longer term chart. It's just a meme, really, but good perspective, I think. Now, look, the other big narrative happening around Bitcoin at the moment, of course, is BlackRock's Bitcoin spot ETF approval. Now, this is really what drove Bitcoin's price performance run up to 30,000. So I think that's important to understand. Oh, I can hear my cat. One sec. I'm going to let my cat out. All right, let's keep going. So the big question, of course, is, will the SEC approve the BlackRock spot ETF? Because they haven't approved any spot-based ETF products as yet. But everyone is starting to think that the BlackRock spot ETF will be approved, and in fact, not just BlackRock's, but also a host of other issuers as well. So this guy here, James Seffer, he works for Bloomberg, is a journalist at Bloomberg, specializes in ETFs, and so does his colleague, Eric. So James says, based on recent events and new information, Eric and I are officially increasing our spot Bitcoin ETF approval odds to 65%. That's up from 50% a couple of weeks ago and just 1% a few months ago. So, James and Eric really are the two subject matter experts, if you like, in the field of ETFs, which is, a fairly niche and a nerdy part of the financial industry. But yeah, so I just think that's a pretty good sign if James and Eric are now up to 65%. And this is actually a week or two ago that they put that tweet. Kathy Wood, similarly, she's the head of ARK Investments. She said to Bloomberg that if the SEC does approve a spot Bitcoin ETF, it's most likely they will approve more than one at once. And I think that is now kind of the consensus view, because it wouldn't really make sense for them just to give one organization such as BlackRock the advantage and deny all the others. I think it makes much more sense if they're going to approve one, and look, it's really just a matter of time, then why not approve a bunch at once? And that is the consensus view. And indeed, so this is Eric, again, subject matter expert, quoting Mike Novogratz on an earnings call last week, saying, our contacts from the Invesco side and from the BlackRock side say that this is now a question of when, not if, that the spot ETF is approved, and the outside window is probably 6 months. So yeah, interesting thing about that, of course, is if it does take 6 months, could happen sooner, but let's say outside chance it takes 6 months, that is going to place us really, early next year, February, March next year, which is just a month or two before the Bitcoin halving. So everything is starting to line up for a really strong year next year, 2024. For Bitcoin. So those are the key narratives: Bitcoin halving and Bitcoin spot ETF approvals. Now, just want to run through a couple of other things that I think are sort of interesting. Speaking of BlackRock, you may have seen, if you spend time on crypto Twitter, people are talking about this. It's an obscure thesis that was published by 3 analysts at BlackRock, looking at asset application with crypto, preferences for positive skewness. Really, they were looking at the role of Bitcoin as a direct investable asset in investor portfolios. I'm not going to go through the whole thing, but basically there's just a headline, which is they found that if you have a traditional investor portfolio, 60% equities, 40% bonds, very much traditional portfolio makeup, they found that the optimal Bitcoin allocation to add to that portfolio would be 84.9%. Even though Bitcoin has an extremely large volatility, the pronounced positive skewness leads to large allocations. So they're just saying, because Bitcoin has been such an incredible, best performing asset on the planet, really, across the last decade and a half, based on that, you want to have a large allocation of 84.9%. Now, they're not really saying that in the real world you should go out and do this, but just if you do the math, that is what the math suggests. Now, if you actually want to dig into this study yourself, it is downloadable. Here it is. This is the website, so you can find it. Just search the title. Probably important to say, BlackRock this was published not necessarily by BlackRock. BlackRock aren't kind of pushing it and saying, yes, you should allocate to Bitcoin. It's just published by three asset analysts or quants at BlackRock. Anyway, it's interesting. Oh, if you want to dig further into this stuff and really get into the math and the weeds, this is a great website I found called Nakamoto Portfolio. I think you can, what you do, go to portfolio analytics, portfolio templates. So they've done all the work for you. Classic 60-40 portfolio. This is what we're talking about. This is what the study was about. 60% equities, 40% bonds. So if we load that up and look at it, and where do we go? I think we go to overview. Here it is. Okay, so the original portfolio, 60-40 equity bonds, would have a total return 87% over 8 years. Pretty good, not bad, 7% per year. However, if you add Bitcoin at either 1%, 5%, or 10%, look, 10% Bitcoin allocation would result in the best return, and that would result in a return of 328%. That's just at 10% Bitcoin allocation. So imagine what the results would be if it was 85%, as BlackRock actually suggested. Anyway, interesting stuff, right? Move along. I thought this was interesting too. Because BlackRock are the world's largest asset manager, and essentially they have a good reputation and everyone in finance trusts them, it means that the narrative around Bitcoin is starting to switch. So this is just one example of that. KPMG, again, very much traditional finance guys like BlackRock, they put out a study looking at Bitcoin's role in the ESG imperative. And so funnily enough, you're starting to see studies now published that look at the role of Bitcoin mining, not as a dirty energy producer, but instead its ability to perhaps drive the focus and deployment of renewable energy around the world. So again, not going through the study, but if you want to find the study, it of course is also downloadable and you can find it there. All right. So going back to this chart and the Bitcoin halving cycle, just a couple of final things to say on here. So this, we looked at how the cycle has kind of played out over those 4 years, right? So you get the bull market, the bear market, and then sideways, doing nothing, reaccumulating as we wait for the next cycle to continue. You can kind of see that on here as well. So you can see basically every 4 years, we start off with the intense bull market, and then intense bear market, and then the cycle continues again. It's slightly different on here, but essentially there's just one really bad year every 4-year cycle. You see it here as well. Bitcoin's down years have all come in the second year after the halving, 2014, 2018, and 2022. Very interesting. Another way of looking at Bitcoin is, this is a chart from Dave the Wave, very popular Bitcoin technical analyst. He's drawn this, what he calls this the Bitcoin logarithmic growth curve. What's interesting is this part shaded down here is what Dave calls the buy zone. So essentially, you want to be, if you're going to buy Bitcoin or invest in Bitcoin, you want to be doing it while it is down at the bottom of the channel, such as early in the day, it would have been back here. More recently, this is 2020 when the last halving occurred. That was also that crash there was the COVID crash of 2020. But of course, because if you do buy down here in the buy zone, then traditionally, you're going to do much better as Bitcoin goes out towards the top of the channel. You've done well. But if you're buying up here at the top of the channel, it's going to take a much longer time for you to recover your investment if it drops again. So the reason I say all this is because we've really been in the buy zone for the last year or so, and we remain there today. So this kind of puts it into a wider context. You can really see, Bitcoin just remaining in that buy zone. Eventually, as we approach the next halving, might, if history repeats, start to head back towards the top of the channel. So still a potentially good time for longer term investors. You got to have that long-term time frame in mind. Still potentially a good time to keep accumulating at the moment based on that chart, I reckon. All right. There's another good way of thinking about things, I think, is just looking at a timeless visual showing the evolution of Bitcoin as a monetary asset. Yes, so you can see this is made a few years ago, I think, but the point kind of remains. We are here today. Bitcoin starts off, so on this axis, we've got market cap, this axis, passage of time, or the Lindy effect. Lindy just means as the longer something is around, the more credible it becomes, the more people start to believe in it. And as the market cap grows and the passage of time increases, a Bitcoin goes from, a simple digital collectible to a reliable store of value, widespread medium of exchange, even full global money. Whether we get there, I don't know, but interesting to see as time goes on. Yeah, we are certainly continuing up that path. And, interestingly, back 24 years ago, Nobel Prize winning economist Milton Friedman, he talked about this. The internet needs a reliable e-cash, he said. So let's just listen to what Milton had to say. Let me make that louder.
I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet.
Yeah, so he's describing Bitcoin, and this is 24 years ago that he described Bitcoin. So I thought that was fascinating. Also, and look, this is kind of a meme chart, but it just kind of shows the crazy times that we live in. So this chart shows world global GDP over the last 2 millennia. So you can see, as we're still sort of hunter-gatherer, early human civilization societies, not a lot happening by comparison. And then just in the last 200 years, as we've had the Industrial Revolution, the technological innovations of the modern age, the hockey stick has, in fact, gone vertical in terms of, exponential growth of world GDP, the sum total of human economic activity and exponential technology growth. And so it's kind of hard to understand sometimes what that looks like. And this is kind of funny. So if you're thinking, you're just sitting here watching this, my life is pretty typical. I have a good grasp of what is normal versus weird, and people imagining really different futures with digital people and AI, space travel, cryptocurrencies. They are indulging themselves in silly sci-fi speculation. But I think, what this chart is showing is that things are getting really interesting. A lot can happen in a year, certainly in 5 years, certainly in a decade, or, just one generation. The world is going to be unrecognizable from what it was a generation ago. We've seen what's happened with AI, these large language models this year. So I guess what I'm saying is, even though the kind of global adoption of Bitcoin, it looks slow, I think it's happening quite quickly. Which means, again, this is a fake cover, it's a meme cover. But imagine The Economist in June 2025 saying, the new global reserve currency and why we were too stupid to see it coming. And you can imagine that that is kind of how it would play out, because people, they don't see it happening all around them. But sudden, it's, slowly, then suddenly. So I think, what I'm trying to say really is just be aware of those narratives, watch those narratives as the world wakes up to the fact that the next Bitcoin halving is happening. And if, as seems likely, the SEC in the US does approve all those Bitcoin spot ETFs, it just makes Bitcoin adoption suddenly easier, investment easier, and adoption will follow. So those are the two catalysts that I think will kickstart potentially, the next wave of adoption, and potentially the next bull cycle as well. All right, let's finish off. We're going to finish off, folks, and we're going to finish off with a quirky little video from a hero of mine and a hero of most, Mr. David Bowie. So this is David Bowie talking back in 1999 about his experiences of the early internet. And I think, again, it just really demonstrates that point of it's very hard to predict the future, but technology is exponential. And Mr. Bowie understood that. Let's listen to him.
I don't think we've even seen the tip of the iceberg. I think the potential of what the internet is going to do to society, both good and bad, is unimaginable. I think we're actually on the cusp of something exhilarating and terrifying.
It's just a tool, though, isn't it?
No, it's not. No, it's an alien life form.
What do you think? I mean, when you think then about the
Is
future,
there life on Mars? Yes, it's just landed here.
But it's simply a different delivery system there. You're arguing about something more profound.
Oh yeah, I'm talking about the actual context, and the state of content is going to be so different to anything that we can really envisage at the moment, where the interplay between the user and the provider will be so in simpatico. It's going to crush our ideas of what mediums are all about. I don't think we've even...
Yeah, so there you go. Wise words from Mr. Bowie to end the show. Look, I hope you enjoyed that. Something a little bit different today, but just, yeah, looking at, as we say, the narrative around the upcoming Bitcoin halving and the BlackRock and other providers spot-based Bitcoin ETFs. So I think we'll keep tracking, those two narratives as we get closer, because I think they are going to really drive the direction of the crypto markets for the next 6 months to a year and beyond. All right. Well, I hope you learned something today. Please make sure you have subscribed to the Crypto Conversation in whatever podcast app you are using. But that is it today, folks. Thanks for watching Pod 99, brought to you by Wealth 99. Bye for now.